Hi, I'm Jenny Brown. Welcome to our last MFB news of 2021. I hope I'm finding you really well, especially under the circumstances. I can't quite believe we're here again, but anyway, I also hope you're feeling really festive. Look, I'm not feeling awfully Christmassy at the moment, I have to say, but I think that's just because I haven't drank enough mulled wine and eaten enough mince pies yet, so I'm planning to fully rectify that this coming weekend. Now, in terms of what we've got for you this week, I've got a new 85% loan to value lender for you that I'm going to cover off. I've got another lender who's made some really interesting changes to their criteria that we're going to go through. And I'm just going to update you on some other tweaks to pricing and criteria around the market. Then sort of more broadly than that, I'm going to cover off, first of all, the changes with regards to affordability criteria that's been talked about in the news by the FCA, and really just kind of update you on what that actually means. It's not really relevant to buy-to-let mortgages, it's more about homeowner mortgages, but even that I think is really worth just kind of highlighting to you. So a little bit on that later on. I'm also going to update you on the RIC's latest position on the EWS1 Forms, and finally just go through some data that UK Finance have released with regards to buy-to-let lending for 2022 to kind of summarise ultimately how we've landed this year. Okay, so first up we have foundation home loans entering the 85% loan to value lending space. A part of the market which I have to say is very, very uncrowded at the moment. So they're joining just a few other lenders who are operating at 85% lending. In terms of pricing, 2-year rates from 4.79, 5-year rates from 4.99%. These are really very competitive at that loan to value, and also they have no arrangement fee, which means that when I'm looking at the other products available in that space, these ones really kind of come out on top. Now, what can I tell you about these products and foundation home loans here? So first of all, these rates are available to individuals and limited companies as well. Now, always the challenge with higher loan to value mortgages is where getting the rental income to work out, basically. So what you'll find is that this is very, very tough for those properties which are lower yielding. So to illustrate that really, excuse me, the 2-year fixed rates have a rental coverage, if you're borrowing personally, of 145% coverage, assuming an interest rate of 5.5%. On the 5-year, it's 145% coverage, assuming a rate of 4.99, which equates to 166 times the monthly rent. So actually, you know, your property's got to be yielding relatively strongly to be able to get you up to 85% loan to value on those calculations. In limited companies, it's a similar story. So the rental calculation is the same, apart from it becomes 125% coverage. So 125 at 4.99. For the 5-year fixed rate, which equates to 192 times the rental income. This is really standard across the board in terms of how lenders kind of do these calculations. But really, like I said, the point to reiterate is that it's quite hard for properties which are lower yielding to get up to this level. But if you've got a property which is really high yielding, this is incredible. So in terms of foundation home loans, the rest of their criteria applies. They have a minimum property value of £125,000. Incidentally, on these 85% products, and this is the only thing which varies compared to the rest of their criteria. So just to recap really, no maximum number of properties in the background. As I mentioned previously, they can enter individuals and limited companies. One of the things that I really like about foundation home loans is they're taking personal guarantees only from the directors of the company, which really helps streamline things and also works really well for those people who have slightly more complex share ownership structures. So for example, husband and wife are directors, but the shareholders are them and their 2 children who are under 18 years of age, for example. So you know, that can really accommodate for that, which is fantastic. They can also do actually layered companies as well. That's another one that we see a lot of. So a company owned by another company owned by individuals. So lots of great criteria that sit around their limited company offering. They have a no minimum income requirement. The 85% products are available on standard properties only, so no multi-units, no HMOs. They do have an offering for that, but not at 85% loan to value. Other things I quite like about their offering, first of all, they have a 10% overpayment facility. Not all limited company mortgage rates come with that, so that's quite nice. I know a lot of people quite like the concept of being able to make little payments here and there where they can. Excuse me. They can also lend to first-time landlords. Short leases they're quite good with, so there needs to be 50 years left on the lease at maturity of the mortgage. So if the minimum mortgage term they would accept is 5 years, then essentially the lease needs to be at least 56 years on the application, which is way, way lower than lots of other lenders. Other things to note, they allow properties with deck access, and they can also do an early remortgage, a remortgage within 6 months of ownership, as long as it's replacing a bridging loan. That's the kind of key criteria there. So look, fantastic that foundation home loans are coming at 85%. Like I say, they've kind of really disrupted the pricing in that space, which is obviously great news. Metro Bank have made, well, a swathe of criteria changes in the last week actually, which is really good to see. So first of all, they have increased their maximum loan size for 75% loan to value lending to £2 million. They have reduced their rental calculations on 5-year fixed rates. So anything up to 75% loan to value, the rental calculation is 140% at 3.5% now. Anything over 75%, because Metro are a lender who can go to 80% loan to value, it's 140% coverage, assuming an interest rate of 4.5%. They have also reduced rates on their 80% loan to value products. The pricing here now starts from 3.29. They've also reduced their 5-year fixed rates across the board, and their pricing here now starts from 2.29%. They have also now made available on new build houses and flats lending up to 80% loan to value. And finally, a very interesting one, which we're seeing a few of the more high street institutions do at the moment, is that they are no longer asking for income proof for self-funding buy-to-lets. Lastly, and these are a couple of quirks that I really quite like, so they're now accepting thatched roofs subject to valuers' comments. We don't, at Mortgages for Business, see a lot of buy-to-lets, I have to say, with thatched roofs, but I know that a lot of lenders are not keen on them at all. So if you are someone who has a property with a thatched roof, Metro Bank could be your solution here. And lastly, they've also started to accept deck access flats. So a deck access flat is, if you imagine a block of flats, and to enter the flat itself, you would go into the property, go up an internal set of stairs, and then pop out and then walk across a balcony, which runs all the way across the front of the building to access the front door. So the properties are accessed via the outside of the building via a balcony, rather than internally via kind of normal corridors, as it were. Not all lenders like deck access, I have to say. These tend to be associated with ex-local authority flats, and there are some issues with those, so it's great to see that Metro have entered the market here. By no means unique, but always great to have more choice. In terms of Metro as a lender, we don't come across them terribly often in our weekly updates, so just to kind of update you on these guys. So first of all, individual borrowing only, no limited companies for these guys. They can accept landlords with up to 10 properties. You can have no more than 5 with Metro Bank. You can be age 80 at the point of application. They allow 10% overpayments. There's no minimum income requirement here, unless you are using their top slicing facility, which we'll talk about another time. Minimum property value is £75,000. Now, they do accept let to buys and consumer buy to lets, and these are two slightly different things. So a let to buy is where I'm going to put a buy-to-let mortgage on the house which I'm currently living in and rent it out, and then I'm going to move out and rent somewhere else, also buy somewhere else to live in for myself. So the mortgage that I'm putting on the property which I'm going to rent out is classed as a let to buy. Now, one of the things people I guess get slightly confused on is that a let to buy is not a special mortgage, it's just a piece of lending criteria. So do lenders do let to buy, yes or no? It's not a special let to buy mortgage. Now, slightly differently to that is consumer buy-to-let, although that can kind of be, I guess, swept into let to buy as well. Because a consumer buy-to-let is a mortgage where the property was not acquired with the sole intention of renting it out. So if you imagine you inherited a property, that would come under consumer buy-to-let. Likewise, if I was going to rent out my current home, that could be classed as consumer buy-to-let. Although if I'm actually a landlord already, then it tends to not fall within that criteria. So Metro Bank are good with these. Another thing that I found really interesting in their lending criteria is they are happy to accept properties with solar panels as long as there's no lease agreement on this. And this is something we have seen come up occasionally, actually, when people are buying properties with solar panels, that the lenders have kicked them out. So that's a really interesting one. And lastly, they are able to accept properties with a flying freehold as long as it's no more than 20% of the footprint of the property. A flying freehold is where you have if you imagine you have 2 houses which are a terrace, but the upstairs of one the bedroom encroaches over to the footprint of the one next door, for example. So that would be a kind of a flying freehold. It's a freehold that flies over a different freehold. So that's what they're happy to do as well. So look, you know, some really punchy changes to criteria from Metro Bank there, which is fantastic to see. Okay, a few other little changes to run through with you for this week. So first of all, Vida Home Loans have withdrawn a couple of their limited edition products. I have to be honest, these limited edition products were absolutely cracking, but unfortunately they've been withdrawn now. We did talk about them in a previous week, I think it was last week, so yes, apologies if you've missed out on those. The Mortgage Works have made some slight reductions to their limited company buy-to-let pricing of up to 20 basis points. And they've also introduced some new products which have no arrangement fees as well there. They've also introduced a 10-year fixed rate for non-limited company buy-to-lets, which is available to 65% loan to value. On the subject of 10-year fixed rates, this is one of those things where people always say to us, you know, oh, have you got any 10-year fixed rates? And then we give them the products and they're like, no, it's too expensive. So while it's a lovely idea in theory, I think that because the pricing is never that competitive on these, and 5-year tends to be much better, they never really tend to be that appealing to people. But actually the Mortgage Works 10-year rate is actually quite good. If you are in the market for one, it's worth having a look at. We've also seen Bank of Ireland make some adjustments to their green products. What they've done is they've discontinued all of their 60% loan to value products. Their 75% loan to value green products have been reduced by 10 basis points, and they've also added in lots of more kind of variations of products at 75%, some of which have, you know, different arrangement fees and different interest rates. NatWest have made some increases to their rates of up to 5 basis points, and the Skipton have changed their rental calculation, which they apply to a background portfolio for portfolio landlords. So that's those of you with 4 or more mortgage buy-to-let properties in the background. So what they were doing is stressing the background portfolio at 145% at 5.5%. They've reduced that down to 125% coverage at 5.5%. In terms of where that sits in the market, there are lenders who do apply that higher stress test that the Skipton were using still, but actually there are also lots of lenders who have kind of different variations on that as well. So if you are struggling to get a mortgage through because you have got you're falling down with the background portfolio stress test, Skipton could be a home for you, but also there are lots of other lenders with more flexible arrangements as well. Okay, now what's been quite widely reported in the news is some changes to the affordability calculations, which are going to be potentially introduced next year for homeowner mortgages, not the buy-to-let mortgages, I hasten to add. But this is interesting, I think, nonetheless, and I want to just run through it with you very briefly and really just explain to you what it all actually means. So essentially, when you're applying for a homeowner mortgage, there are 3 kind of checks that lenders have to do. They have to make sure that the mortgage is affordable based on an affordability calculation. There's also a cap in terms of the multiple of income lenders can use, which is generally 4.5 times income, but lenders are allowed to do a certain percentage of their lending in excess of 4.5 times income, as long as the borrower meets the affordability calculations. There's also a further test that lenders need to do to make sure that the mortgage would be affordable to the borrower if interest rates go up. And the stress test that's normally used here is an increase of 3 percentage points above their standard variable rate. So essentially what has happened is there's been a review carried out in terms of the lender's kind of policy and the requirements, and what they've actually come to the conclusion of is actually this third test, which is the stress testing of affordability, assuming interest rates have gone up, it really adds no value. So that's going to be removed from the requirement on lenders when they're looking at affordability for residential mortgages. The other 2 requirements, so the affordability checks and also the loan to income ratio, so the 4.5 times income, that part will remain in situ, absolutely. So in terms of the sense of applying for a mortgage, they will certainly loosen things up a little bit in terms of lender calculations, but I don't think you're going to see anything that's going to be earth-shatteringly life-changing in terms of how much you can actually borrow. Now, just to kind of cover off the loan to income ratios very briefly, so 4.5 times income is kind of the amount that lenders should be going to, but they are allowed to make exceptions to this for certain borrowers and on a certain percentage of their loan book. So we do see that lots of lenders actually quite easily go up to 4.75 times income. Some can go up to 5 times income, and actually there are even a handful that can go to 5.5 times income for very exceptional cases. Now, these more generous income calculations, I'm still on buy-to-let, tend to apply particularly to higher income earners, because these guys will have a greater amount of disposable income after sort of basic living costs, which they can dedicate towards paying a mortgage. So that's what you're hearing about in the news. So it'll be interesting to see how that actually lands kind of in real life when lenders start bringing this in 2022. Yeah, and we'll keep you updated on that with the news as it follows. Moving on to EWS1 Forms now, you may remember that back in July it was announced that the government had that it wanted RICS to drop its requirement for EWS1s to be checked for buildings under 18 metres in height. And at the time, Robert Jenrick, who was the Housing Secretary then, said that agreements had already been made with larger lenders that lower-rise buildings would no longer need the form and so could be bought and sold as normal. And actually we had seen that come into play as well, particularly Lloyds Banking Group. They were kind of just removing the requirement for EWS1 as a matter of course. However, in the last week, RICS has announced that it's opting to retain its current guidance, so essentially it's not going to be following this after all. And it claims that it's doing so with the full backing of the industry, arguing that doing so safeguards future buyers of properties in blocks with cladding. Now, obviously, this is terribly bad news for those people who are in these kind of properties which are, you know, they can't sell them, they can't remortgage them. So it's going to be a terrible blow for these guys, unfortunately. Now, what the RICS have done is call on the government to be bold in setting out a new strategy for tackling the cladding issue, noting that with an estimated 77,500 medium-rise residential blocks in England of between 11 and 18 metres, the cost of fixing fire safety defects is expected to total £15 billion. So look, you know, really bad news, and I'm sorry if you're hearing this and this is going to actually apply to you, but let's see what the government can come up with in the coming weeks and months to help kind of get this back on track for you, and we'll obviously keep you posted. Okay, and lastly this week, UK Finance has predicted that buy-to-let purchase activity would have increased to 18 billion this year, which is up 83% in 2020. The UK Finance said the main driver of lending in 2021 was for house purchases at 200 billion, which is up 53% on 2020. However, homeowner remortgaging activity was slightly down on last year at 62 billion. So just to kind of dissect that briefly for you, what they're saying is that overall, lending was up massively compared to last year, but actually proportionately buy-to-let lending was up much more than homeowner, which is surprising because given the types of transactions that we've been seeing going on, I would have thought that actually buy-to-let wouldn't have been quite as strong in that market, but there you go, the data speaks for itself. So looking ahead, UK Finance said that while 2022 and 2023 gross lending figures will be reductions on the 2021 peak, they will be higher than the 2020 and 2019 figures, which represents a return to more stable levels of activity. Now, a chap called James Tatch, who's the principal data and research person at UK Finance, said that 2021 has been a bumpy year for mortgage lending amid the stamp duty holiday and home workers moving from cities, but the outlook for the housing and mortgage markets over the next 2 years is for a return to a more stable, balanced picture following the upheavals of the last 2 years. And when I've been looking at actually the kind of predictions for 2022 in terms of house purchase transactions, of course, you know, we're going to see a slowing down compared to this year because this year was just exceptional for lots of different reasons. But actually what we're not seeing is things falling off a cliff. You know, it is literally a return to a kind of more stable level, but numbers will still be up on pre-pandemic conditions. So there you go, a little snapshot into 2022 for you there. And that is everything from me this week and also this year. So it's just left for me to wish you and your families a really wonderful Christmas. I hope you all have a great time and also stay very, very well. We'll be back in 2022, raring to go and take on the new year with gusto. If you do have any questions, the office is open the whole way through. Unfortunately, I'm working in between Christmas and New Year, so if you call up, you may even be unlucky enough to get me on the phone. 0345 345 6788. Or, you know, if you're a bit bored by Boxing Day and the family are getting on your nerves, go and have a look at our website. Loads of great stuff on there as well. Really do have a wonderful Christmas, and I'll see you next year.